Gross income, net profit, and overhead expenses. Total revenue, money you keep, cost of doing business. Gross income is the total amount of money taken in. Within the gross income is the cost of materials and labor, overhead, expenses, and profit. Overhead expenses include things like rent, utilities, the cost of a truck, or giving free, quote-unquote, bids to get more work. The test to tell what is an overhead expense is if the expense remains even if no work is done. The rent of the office has to be paid whether working a job or not. Therefore, it is an overhead expense. Profit or net profit is the amount of money kept after the job is done. The money made above and beyond the cost of doing the work. Gross income, overhead expenses, and net profit are used to calculate the markup. Markup is gross revenue divided by the quantity of gross revenue minus the sum of overhead plus net profit. Markup can be used as a multiplier of any total materials and labor to arrive at a price for doing a job. Gross income is the total revenue, net profit is the money you keep, and overhead are the expenses which have to be paid whether working or not, like rent. Multiple choice question, gross income, net profit, and overhead expenses. A. Single multiplier of materials and labor to arrive at price of job. B. Amount of income after material, labor, and overhead is paid. C. Total revenue, money you keep, cost of doing business. D. Calculating the cost of building what is on the plans. Well, the best answer choice in this case from what we've been given for gross income, net profit, and overhead expenses is total revenue, money you keep, and the cost of doing business.